Hi everyone. In this video, I'm going to go through Nike's most recent conference call and look at what management said to try and figure out what's going on with Nike stock. So let's get right into it. Let's start with Nike President and CFO John Donahue and his opening comments saying, "We delivered a strong quarter in Q2 with revenue growth of 17% on a reported basis and 27% on a currency neutral basis. That's really strong growth from a company that was over the longer run grows revenue at about 8-9% over the last decade. It grew 17% in the last quarter, so and 27% if you look at it currency neutral. So really above average growth for Nike in its most recent quarter. The quarter saw more than 30% currency neutral growth in North America, Europe, Middle East, and Africa, Asia Pacific, and Latin America geographies, and after nearly 2 years of unprecedented disruptions in Greater China, they grew 6% on a constant currency basis. So that's really good to hear. Their uh, business in China has been the one with the most headwinds over the last couple of years, as Chinese lockdowns have been more severe than in any other part of the world during that entire time. So Nike has considerable business over there in China. And so as that economy has been reopening slowly, it's been recovering its business there, and that's going to be a tailwind for Nike going into calendar year 2023. The big story for Nike in the most recent 2 quarters, I would say, is its inventories, its excess inventories. Management is taking decisive actions to clear this excess inventory. Our current headwinds, such as foreign exchange and inventory challenges, are transitory, but our tailwinds are structural, like the expanding definition of sports, the consumer move to digital, and the cultural shift toward comfort and wellness. And I would say, out of all three of those tailwinds, the consumer move toward digital is the most meaningful for Nike. Uh, it allows Nike to go direct to the consumer more easily than it otherwise would have. If there wasn't this robust shift from consumer spending to digital going online, then Nike would have needed to open a lot more of its own brick and mortar stores, which it would have called for a greater capital investment. With the consumer shift to digital, Nike was able to just invest in its website, which then attracted millions of customers to its online channel. And now Nike is able to go direct to consumer, cut out that middleman, and make an increase in gross profit margin on each unit it sells. And the CEO even mentions this consumer direct acceleration is fueling our marketplace approach, in which we directly connect with the consumer no matter where they shop. And their digital business grew an industry leading 34% in this quarter. That's really good. Today we have over or roughly 160 million active Nike.com members or Nike app members. That's a lot of active members for a company to have. Nike is already learning more about our members, which helps us elevate in areas such as product creation, planning, and the experiences they deliver. Right? The more Nike connects to its customers, the more it can do these things that it just mentioned there. And so that closer connection to its customers is going to be a tailwind, and we've already seen evidence of this. And it's allowing its gross profit margin to expand, and we're going to see a little bit later, management's going to talk about how the easing supply chains are going to even help more in this regard. Here the CFO is talking about Matthew Friend, talking about within Nike Direct, retail traffic was up, conversion rates expanded, and member buying fueled the record digital results. Within wholesale, we saw strong retail sales and market share gains across our top strategic partners. And globally, our holiday season momentum has continued through the first few weeks of December. So, despite operating in a largely promotional marketplace, they're seeing full price realization remaining strong after strategic price increases. Um, that's really good news. Nike brand's ASP, which is average selling price, is up year over year across geographies, even with the higher discounts to liquidate excess inventory. That was the big surprise in its most recent quarter. I already mentioned earlier that Nike's inventories are way higher than where it would like it to be, and Nike has been uh, running several promotions to try and sell some of that excess inventory. And despite that elevated promotionary activity in its most recent quarter, Nike brand's average selling price was up. So even amid this liquidation in higher inventory levels, it was able to drive higher prices, which is really impressive and really speaks to Nike's pricing power and its brand power, that it didn't need to discount very much in order to start reducing some of its inventory. Whereas another brand may have needed to take more extreme measures to get rid of inventory. For Nike, a moderate, a 10% discount or a 20% discount drives a really good customer response and gets people to buy a lot more than another brand may be able to do. So that all speaks well to Nike. All right, so that's all I've got for this video. I hope you've enjoyed this. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.